Did you know that a staggering 60% of adults do not invest, mainly due to lack of knowledge and understanding? Yes, that's right. Over half of the adult population is missing out on the opportunity to grow their wealth. That's a lot of missed opportunities, isn't it? Investing is not as complicated as it sounds. Think of investing as planting a seed for a tree that will bear fruit in the future. It's about setting aside a portion of your money, not to spend right now, but to grow over time. The money you invest gets put to work in various ways, like in stocks, bonds, or real estate to generate returns. Why is investing important? Well, it's your ticket to building wealth and securing a stable financial future. Without investing, your money just sits there, losing value due to inflation. But when you invest, your money works for you. It grows, it multiplies, and it helps you reach your financial goals. Whether that's buying a home, funding your children's education, or securing a comfortable retirement. Remember, you don't need to be a millionaire to start investing. Even small amounts can grow significantly over time. So, investing is not just for the wealthy, it's for everyone. One of the major roadblocks to investing is fear. Such a simple statement, yet it carries a weight that often hinders potential investors from taking that first leap into the world of investing. Firstly, let's talk about the fear of losing money. It's a valid concern, no doubt. After all, no one likes to lose hard-earned cash. However, it's crucial to understand that investing is not akin to gambling. While there is an element of risk involved, investing is about making informed decisions based on research and analysis. It's not about throwing your money into the wind and hoping it lands somewhere profitable. Moreover, the potential for loss should not overshadow the potential for gain. Every successful investor has faced losses at some point. What sets them apart is their ability to learn from these losses, adjust their strategies, and continue on their investing journey. So instead of viewing potential losses with fear, consider them as opportunities for learning and growth. Next, we have the notion that investing is too complicated. Granted, the jargon and technicalities can be intimidating at first. However, just like learning a new language or mastering a new skill, understanding investing requires time, patience, and practice. There are countless resources available, from books to podcasts, online courses, and even YouTube videos like this one, that can help demystify the complexities of investing. Remember this, you don't have to be a Wall Street whiz to start investing. You just need a willingness to learn and a commitment to continually educate yourself. Lastly, there's the belief that one needs a lot of money to start investing. This couldn't be further from the truth. Thanks to the advent of technology and the democratization of financial markets, you can start investing with as little as the price of a cup of coffee. The key here is not the amount you start with, but the consistency of your investments. Regular, consistent investments, no matter how small, can accumulate over time and lead to substantial wealth. This is the power of compounding, a concept we'll delve deeper into in the next segment. It's natural to feel apprehensive about venturing into unfamiliar territory. But remember, every seasoned investor was once a beginner too. They too had fears and doubts, but they didn't let these hold them back. Instead, they equipped themselves with knowledge, took calculated risks, and embraced the journey with all its highs and lows. But the reality is, these fears are often based on misconceptions. By challenging these misconceptions, by arming ourselves with knowledge and understanding, we can turn fear into a motivator, a catalyst that propels us towards financial freedom and wealth creation. So let's embrace the journey, one investment at a time. There are numerous ways to invest your money. This statement rings true now more than ever. The world of investing is a vast landscape full of different paths you can take to potentially grow your wealth. Let's explore some of the basic investment options: stocks, bonds, and real estate. Stocks, also known as equities, represent ownership in a corporation. When you buy a stock, you're buying a piece of that company. You're essentially betting that the company will do well, and as the company's profits rise, so does the value of your stock. And if the company pays dividends, you'll receive a portion of its profits directly, usually on a quarterly basis. But stocks are volatile. Their value can rise and fall dramatically in a short period, which means you could potentially lose a significant portion of your investment. Now, let's talk about bonds. While stocks represent ownership, bonds represent debt. When you buy a bond, you're essentially lending money to an entity, such as a corporation or a government. In return, they promise to pay you a fixed amount of interest over a specific period and to return the principal amount at the end of that period. Bonds are generally considered less risky than stocks. They can provide a steady income stream, but the returns are usually lower. And then there's real estate. Investing in real estate involves buying properties, whether residential or commercial, with the aim of generating income from rent or selling for a profit. Real estate can provide a steady cash flow and potential tax benefits. However, it requires a significant upfront investment and ongoing management. Each of these options carries a different level of risk and potential return. Generally, the higher the potential return, the higher the risk. This relationship is known as the risk-return trade-off. It's like a seesaw. As one side goes up, the other goes down. Think of it this way. Imagine you're in a boat in the middle of the ocean. Stocks are like the high, choppy waves that can take you far but might also capsize your boat. Bonds are like the calm, steady current that carries you slowly but surely towards your destination. And real estate is like the anchor you drop to steady your boat, providing a consistent, if slow, return. Now, you might be wondering, how do I choose the right investment for me? Well, that depends on your financial goals, your time horizon, and your risk tolerance. If you're young and have a long time horizon, you might be able to take on more risk and invest more in stocks. If you're closer to retirement and need a steady income, bonds might be a better choice. And if you have the capital and the patience to manage properties, real estate could be a good option. It's also important to diversify or spread out your investments across different asset classes. This way, if one investment doesn't do well, you have others that might. Diversification can help reduce risk while still allowing for potential growth. Remember, investing is not about getting rich quick. It's about steadily building wealth over time. It's about taking calculated risks and making informed decisions. It's about understanding the nature of different investments and how they can help you achieve your financial goals. Each investment option has its own risk and return profile, and it's important to understand these before you start investing. So take the time to learn, to ask questions, to seek advice. Your future self will thank you. One of the most powerful forces in finance is compound interest. Imagine you're planting a seed. This seed, with the right care and nourishment, grows into a small plant. Now, this plant doesn't just stay small forever. It continues to grow day by day, year by year, until it becomes a towering tree. That's a bit like how compound interest works. It grows your money, not just from the original amount you invested, but also from the interest you've already earned. It's essentially interest on interest, and it can turn small amounts of money into sizable sums over time. Let's delve a little deeper into this. Suppose you invest $1,000 at an annual interest rate of 5%. At the end of the first year, you'll have earned $50 in interest. Now, in the second year, you're not just earning interest on your original $1,000, but also on the $50 you earned in the first year. So, at the end of the second year, your interest earned is $52.50, not just $50. That's the magic of compound interest. Now, what if you continue this for 10 years, 20 years, or even 30 years? The numbers can become quite astonishing. It's like a snowball rolling down a hill, growing bigger and bigger as it picks up more snow. That's why it's often said that the most powerful factor in investing isn't money, but time. This is why starting to invest early is so important. Let's say two people, Alex and Bailey, both decide to invest. Alex starts at 25 and invests $200 a month until he's 35. Bailey, on the other hand, starts at 35 and invests the same amount until she's 65. Even though Alex has invested for a shorter period, he will end up with more money at 65 than Bailey. Why? Because Alex's money had more time to compound and grow. Compound interest isn't just about making you wealthier, though. It's also about giving you financial freedom. The more your money grows, the more options you have. You can choose to retire early, start a business, or even take a world tour. The possibilities are endless. So, how can you harness the power of compound interest? Start by investing early and regularly. Even small amounts can grow into a fortune over time. Next, reinvest your earnings. Remember, compound interest works best when your interest is earning interest. Finally, be patient. Compound interest is a slow process, but the rewards can be immense. As you can see, time is a powerful ally when it comes to investing. The sooner you start, the more time your money has to grow. And that's the power of compound interest. Now that you have a basic understanding of investing, what's the next step? Don't just stand on the sidelines, jump in. Start your investment journey today. Subscribe for more investment insights. Thank you for watching. And remember, the journey of 1,000 miles begins with a single step.